Most business owners think you have to sign a personal guarantee, putting your house, car, and savings on the line just to get business funding. That's only true if you don't have a business credit profile. Build the profile first, and you can access 50K up to 250K in business credit with no personal guarantee. And CNBC, NerdWallet, and Forbes all confirmed it this month. My name is Justin. I'm not your typical CPA. I focus on business growth and finance. Let's go. Last week, I showed you how to stack SBA loans for $10 million. But here's what I didn't tell you. Every single one of those loans required a personal guarantee. Your house, your car, your personal savings, all on the line. Now, that's the SBA's rules. But what if I told you there's a completely separate system, business credit, where you can build 50,000, 100,000, even 250,000 in credit lines without a personal guarantee. No PG, no credit check on your personal file, no risk to your house. Here's the thing, CNBC, NerdWallet, and Forbes all published articles about this in the last 30 days. The mainstream financial media is finally catching on to what a small group of business owners have known for years. Today, I'm showing you the exact four-tier system to build business credit with no personal guarantee. From net 30 vendor accounts all the way to 50K plus cash credit lines. And it ties directly into what we've been building. Here's what happens to most business owners. You need funding, you go to the bank, the loan officer says, great, we can get you $100,000, just sign right here. You look at the paperwork, and buried on page 4, paragraph 7, there is this thing called a personal guarantee. You know what that means? If your business fails, if the economy turns, if you lose a major client, if a global event hits, the bank can come after your house, your car, even your kids' college fund, everything you built personally. I've seen it happen. Good people, hardworking business owners who did everything right, built a business, created jobs, served their community, and when things went south, they lost their personal assets because they signed a personal guarantee they didn't fully understand. That's not a strategy. That's gambling with your family's future. And it's completely unnecessary if you build business credit the right way. That means before you need the money. A personal guarantee, or a PG in the industry, is exactly what it sounds like. You personally guarantee the debt. The lender checks your personal credit. They look at your income. And if the business can't pay, you pay, or they take your personal assets. Now, the SBA requires a PG on most 7(a) and 504 loans. That's just the government rules. But outside the SBA loans, there's an entire ecosystem of business credit, vendor account, store cards, fleet cards, and cash credit lines, where a personal guarantee is not required if your business credit profile is strong enough. The key phrase there is if your business credit profile is strong enough. Most business owners don't have a business credit profile. They've been operating under their personal credit for years. So when they apply for business credit, the lender defaults to checking personal credit and requiring a PG. We're going to fix that today. 4 tiers. Follow them in order. Tier 1 is your foundation, your net 30 vendor accounts. These are companies that extend credit to your business with 30-day repayment terms. You buy something, office supplies, shipping materials, software, and you have 30 days to pay. No interest, no PG. But here's the critical part. These vendors report your payment history to the business credit bureaus. And that's what builds your business credit profile. DMB, Experian Business, Equifax Business. These bureaus track your business payment history separately from your personal credit. Here's the process. You set up your business entity, your LLC or your corporation. Get your EIN from IRS, and you get a DUNS number from Dun& and Bradstreet. That's your business credit file number. Both your EIN and your DMB number are free. Then you apply for 3 to 5 net 30 accounts. Buy something small, $50, $100, pay it off in full within 30 days, and then repeat the process for 60 to 90 days. That's it. That's tier 1, but you cannot skip it. Every tier below builds on the one below it. Skip tier 1 and the higher tiers will require a PG because your business credit profile is empty. Tier 3 fleet cards, gas cards. This is the bridge between your store credit and real cash credit lines. Fleet cards like WEX, Fleet Core, Voyager, these are gas and vehicle maintenance cards. Lower risk for the lender because they can only be used for fuel and vehicle expenses. Credit limits typically range from between $1,000 up to $5,000. But here's why tier 3 matters. Each tier you complete strengthens your business credit file. By tier 3, you have 8 to 12 trade lines reporting. Your Paydex is 80 plus. Your Experian business score is established. And the lenders at tier 4, the cash credit lines, they can see your full payment history without looking at your personal credit. That's the system. Each tier reduces the lender's risk. Net 30 vendors take almost zero risk. Store cards take a little more. Fleet cards a little more. And by the time you reach tier 4, your business credit profile is strong enough that the lender doesn't need a personal guarantee. Tier 4, this is the payoff. Cash credit lines. Visa, MasterCard business credit cards with $5,000 to $50,000 plus limits and no personal guarantee. Now here's where the breaking news comes in. This month, CNBC, NerdWallet, and Forbes all published updated guides on business credit cards with no personal guarantee. The list is growing. Bill, Divvy, Ramp, Brex, these are newer fintech companies that approve based on cash flow, not personal credit. No PG, no personal credit check. But here's what the mainstream articles don't tell you. These fintech cards are great, but the real money, 50K, 100K, 250K, comes from the traditional lenders who offer no PG cards specifically to businesses with established business credit profiles. And to get there, you need tiers 1, 2, and 3 done first. The CNBC article makes it sound easy. Just apply. But if you apply without a business credit profile, you will get declined. If you apply with a thin profile, they're going to ask you for a PG. You need the foundation, and that's what we're building right now. So here's the 4-tier timeline. First, start with tier 1. These are your net 30 vendors. It should take you 60 to 90 days, and you're going to be building out your DMB file, your Paydex score, and you want 3 to 5 trade lines, and you will want to establish your Paydex score at 80 plus. Tier 2, this is your store credit. Again, 60 to 90 days, you'll be building out your Experian business file. Get 2 to 3 store accounts with on-time history. Tier 3, this is your fleet credit, your gas cards. Should take you 60 days. You'll be building out your Equifax business file. Get 1 to 2 fleet cards with perfect payment history. And then on to tier 4, this is your cash credit with no PG. And it's ongoing. It's working on your full business credit profile. And you should be getting 50K to 250K in cash credit lines. The total time from 0 to 50K plus in no PG business credit should be 4 to 6 months, not 4 to 6 years, 4 to 6 months max. If you start today, by December 2026, right around the holidays, you could have 50,000 in business credit that has zero connection to your personal credit. Your house is safe. Your car is safe. Your personal savings are safe. Here's the number one mistake I see. Business owners hear about net 30 accounts. They apply for 10 of them in 1 week and then nothing. No approvals. Why? Because they applied before setting up their DUNS number, before registering their business with the Secretary of State, before getting a business phone number listed in 411. The lenders check, they verify your business exists. If your business isn't registered, doesn't have a listed phone number, doesn't have a business address, you look like a scam. Instant decline. Every single one. Remember, foundation first, entity, EIN, DUNS number, business phone listed in 411, business address. Then apply for your net 30s. I cannot stress this enough. Here's why this matters beyond just money. When you build business credit, real business credit, no PG, you're building something that outlasts you. Your business credit profile is an asset. It grows, it compounds. The more trade lines you add, the stronger it gets. And when you're ready to go after SBA 7A or 504, you walk into that lender's office with a business credit profile that makes their underwriter's job easy. This is what the business tribe is about. We're not just repairing credit, we're not just getting funding, we're building financial systems, personal and business, that protect our families, grow our wealth, and create generational stability. The business owners in this community who follow this process, they're going to walk into 2027 with six figures in business credit that didn't exist a year ago. No personal guarantee, no personal risk. That's power. That's freedom. That's what we're building together. So remember, when we're building out business credit, this 4-tier foundational system to get multiple trade lines on our business credit profile. Once we stack up our business credit profile, then we can go after the no PG cash credit lines from fintech companies and from traditional lenders. That's where we can stack up and get the big $50,000 to $250,000 lines of credit, and even large SBA loans up to $10 million. So if you've gotten any value from this video, drop a fire emoji in the chat, hit that like button, smash that subscribe button, leave a comment. It helps the algorithms, and to your success. Salute.